Ladies and gentlemen, good day and welcome to the 4Q FY22 earnings conference call of SAIL, Steel Authority of India Limited, hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Chandak from Motilal Oswal Financial Services Limited. Thank you, and over to you, sir.
Thank you, Rutuja. Good afternoon, everyone, and welcome to the fourth quarter earnings call for Steel Authority of India. On behalf of SAIL, I would like to apologize for the delay because of some unavoidable circumstances. I would also like to thank the management of SAIL for giving us this opportunity to host them again for this call. So from the management side, we have Mr. Tulsiani, who is the ED Finance. I welcome you, sir, and over to you for your opening remarks.
Thank you, Vishal. Good afternoon, everyone, and welcome to the investor Concall on the financial results for Q4 and financial year 22 of SAIL. First of all, I would like to thank Vishal Chandak from Motilal Oswal for arranging this Concall. The company has published the results yesterday, which I'm sure everyone must have seen, and I'm happy to see the reactions from the different corners. I would briefly apprise the audience on the highlights. Starting with the economic scenario that we have been operating in, the economies around the world have since been fighting the impact of COVID-19. While the recovery stories around the globe have been heartening, the economies have now been thrust into inflation concerns as well as the uncertainties and supply chain disruption emerging from Russia-Ukraine war. The Indian economy has also charted a V-shaped recovery path. Though the yearly GDP ended in red at 6.6% for financial year 21, but the estimates of financial year 22 has been pegged at 8.9% growth in the second revised estimates published recently. The scenario, however, is now being swayed by inflationary measures and Russia-Ukraine war. The projections for the coming years have been getting moderated accordingly. The steel industry has enjoyed one of the best periods during the first half of financial year 22, which was later eaten into by the rising prices of imported coal, CDI, ferroalloys, etc. The steel demand and prices have also been volatile during the end of financial year 22, given the consistent decline in production and demand in China and global trends. Now we come to the performance of SAIL. Company has clocked its best ever production and sales during the year. The crude steel production for financial year 22 is at 17.36 million ton as compared to 15.21 million ton in financial year 21. There is a growth of 15%. The sales for the year have been the highest ever at 16.15 million ton as compared to 14.94 million ton in the previous year. As mentioned earlier, the increase in prices of imported coking coal and other raw materials had a major impact on our cost of production. The impact of coking coal alone had an adverse impact of more than 12,000 crore on the cost for sale. The company had been taking measures for improvement in operational efficiencies, which partially offset the impact of the same, like reduction in coke rate by 1%, replacing coke with CDI by around 12%, reducing specific energy consumption by around 2%. The changes in MMDR Act has impacted the company substantially during the year, with royalty payments increasing. In line with the physical performance, it has posted its best ever annual financial results. For the first time in the history of SAIL, the revenues from operation has crossed 1 lakh crores. For the year, it was 1,03,473 crores as compared to 69,110 crores. Quarter 4 also was very good for us and we clocked a revenue from operations of 30,758 crores. The EBITDA for the financial year 22 is at 22,364. The PBT is 16,039 crores, and PAT is 12,015 crores. SAIL is focused on proactive stakeholders engagement, which includes the company has recommended 2.25 rupees as final dividend for financial year 22. SAIL has declared highest ever dividend in financial year 22, that is 8.75 rupees, which includes 2 interim dividends declared earlier. SAIL also emerged as the topmost buyer on GEM amongst all the CPSCs in financial year 22. SAIL has supplied steel for various projects of national importance like the Central Vista Delhi, Mumbai-Ahmedabad High Speed Rail, Delhi-Meerut RRTS, Polavaram Irrigation Project, etc. We have also supplied liquid medical oxygen in excess of 1.3 lakh tons, majorly during the second wave of COVID-19. We also set up separate jumbo COVID care facilities, which increased the COVID-19 dedicated beds. For our employees also, we have implemented the wage revision, which has helped in improving their motivation to a very large extent. We are regularly now holding customers' meets to understand the requirement of our customers. The borrowings also have reduced significantly during the year. We have reduced our borrowings by nearly 22,000 crores to the levels of 13,400 crores. With these words, I hand it back to Mr. Chandak for opening the question and answer session. Thank you.
Thank you, sir. Rutuja, can you please open this for the Q&A?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets and limit your questions to 2 per participant. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Yeah, good morning, sir, and thanks for the opportunity. And congratulations for a good performance. I have a couple of questions. The first one is on coking coal. While you have indicated that the coking coal cost increase was around 12,000 rupees per ton in the quarter, can you quantify the coking coal cost in Q4 FY22 in dollar terms and how it is expected to change in Q1 FY23? That is the first question.
Another question?
Sorry?
Yeah.
Yeah, so that's the first question on coking coal. Thanks.
Right. In the financial year 21-22, the total imported coal cost was around 20,000 rupees.
No, sir, I'm asking in Q4 FY22, what was the coking coal cost and how it is expected to change in Q1 FY23?
It is supposed to, it is likely to go up substantially in in Q4 only. It was around about 28 to 29,000 in that range, and it is expected to be slightly more in the first quarter of 20 to 23.
When you say slightly more, how much is the slight?
You can say around about 10 to 12% increase.
10 to 12% increase.
Yeah.
Thanks, that's helpful. The second question is essentially that the government of India has imposed export duties, and we expect that realization in domestic market would be lower as a result. Now we have a substantial brownfield capex plan. So does this move by the government change in any way your capex ambitions, or you are planning to delay the capex, or what kind of capex we can look for, in the coming 2-3 years?
We have some long-term plans for expansion. In the immediate future, we are basically going in for some rehabilitation and debottlenecking schemes. So for the time being, means it's too early to decide on doing something, thinking about it in another angle. We'll continue with our investments in our current plants and assets. And regarding the future expansion plans, we'll just take a call after some time. Means we cannot take a call immediately that we'll defer something or we'll continue. We are neutral on that for the time being.
Okay. So what would be the capex for this year and the next one?
We planned a capex of 8,000 crores for 22-23.
Okay. Thanks, sir. That's very helpful. Congratulations and all the best.
Thank you very much.
Thank you. Participants are requested to please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Rajiv Bajaj from Systematics. Please go ahead.
Good morning, sir.
Good morning.
Good morning, sir. I'm Rajiv Bajaj from Systematic.
Hi.
Sir, what's your total borrowing as on 31st March 2022?
It is 13,386. The total borrowings are 13,386 crores.
But sir, in your presentation, you are showing 17,284.
It is the NKS impact.
For the debt equity also, you are shown according to that.
Yeah, according to that.
So what that 17,284 consists, sir?
It consists of financial leases.
Means current liabilities are also taken in that borrowing.
Financially, 3,800. The financial leases are 3,898 crores. If you add this with that, then probably it will add up. So basically, the borrowings are 13,364 crores. 386.
I have got, sir, borrowing, so I have seen that because it doesn't include that lease liability which is appearing balance sheet. But that 17,000 figure I am not able to reconcile. That is in your presentation, not on your accounts.
Mr. Rajiv, the borrowings are basically in the presentation shown inclusive of the financial lease liabilities which we have to account for in terms of the Ind AS requirements. So that is a part considered as a part of the borrowing. So the presentation reflects that figure of 17,000. But if we talk about the pure debt, what we are holding as on 31st of March, like sir has said, the borrowings stood at 13,386 crores.
Okay. Got it. Thank you, sir. Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity.
Namaskar.
Sir, yes, sir. So firstly, as the earlier participant have spoken about this export tax, so sir, how is the steel sector and SAIL in particular impacted by this, if I may use the word ad hoc introduction of export tax? How is this going to impact the industry and SAIL in particular, sir? Your understanding on this?
Yeah, actually, from the sources what we have got, there are around about contracts worth nearly 2 million tons of steel exports, which will have to be catered to in this coming future. But SAIL doesn't have that much quantity of exports. And SAIL also has got one advantage that it is basically into exporting of semis also. It has exports of semis also. So semis are basically not impacted by this export tax. So, but yes, we have got certain orders and we are evaluating what is to be done about that.
But for the general steel industry, sir, how is the demand supply scenario for the country going to very likely change because of the introduction of this tax?
Too early to comment on this at this point of time for the industry. But of course, we have certain things that our export orders are comparatively less. So not much of an impact is expected because of this. But yes, the extra quantum which comes into the industry, into the country, and even so that will surely have an impact on and just put some pressure on the prices also.
And sir, can you give some more color how the Q1 has been shaping? So generally, we find the quarter preceding the monsoon being the strongest quarter in the sense of built up and also the demand push is there on the construction front. So how have you seen this 45 days shaping up for Q1, sir? And also, sir, the finance costs have been significantly higher for this quarter, sir. Any one-off item that you have being factored for this quarter?
And short-term loans.
Yeah. Come again. Can you just repeat the question?
Yes, sir. Sir, finance costs have been significantly higher Q on Q, sir, when we take December versus March, from 316 level to 440 levels. So, what explains this increase? And secondly, was the business environment for us for the current 45 days, with the first quarter being a strong quarter just preceding the monsoon? So, how is the demand currently shaping up? Your thought process, your thought on the same.
Yeah, actually, I don't know your finance cost. What you're telling about?
Yes, sir.
Yeah.
Finance cost for 31st March 2022 is 440 crore, whereas for 31st December it was 316 crore. So I was just looking for the reason for the increase Q on Q.
This is mainly the forex loss, which has also been accounted for out here. The interest cost is quite low. Actually, the interest cost for the particular quarter is in the range of around 250 crores. The balance is the forex loss.
Balance is the forex. Okay, sir. And now on the demand part, sir, how is the demand shaping up? And currently, as per what we exited March quarter, the realization, how are the realizations currently for the flat and the long products, sir?
Realizations in April were better. I think the entire industry had better realizations. That was basically the pressure of the coal cost, which had. But of course, May again, there are some pressures on the prices. So we are trying to cope up with that.
And there have been a decline in the realization, sir. Can you quantify for us what kind of cuts have we factored in?
What happens is this quantification cannot be done at this moment of time because there are certain long-term contracts which we are continuing, and there will be certain contracts which will be entering now. So overall, what is going to be the impact, we cannot assess it during the month. It is possible only after the month is ended.
And on the iron ore sales, sir, can you quantify what have been the revenue we have booked for this quarter and for the entire year on the sale of iron ore?
We normally do not share this figure.
And on the inventory part, sir, there was some litigation issue with the Jharkhand government. So any update on the same?
There's not much change.
Okay. And lastly, sir, on this divestment of the loss-making unit at Vishweshwara and the Salem steel plant, sir, any update you would like to share? And also in the segment results, we have find the other segment showing a profitability of 240 crores on a revenue of 434 crores. If you could explain the same, sir.
Other units. Actually, here we pay the incentive PRP to the employee of the sale. So last time it was kept in the HO books, and this time it is appearing in the plant book. So that is why that 208 crore negative is appearing in the previous year, and this time since it is coming in the plant books, so the other units it is showing the plus.
Right. And on the disinvestment part, sir, of where are we on the divestment of the Salem and the Vishweshwara steel plant?
Steel plant.
Hello. Yes, sir. The divestment of the small units, sir.
Yeah. Actually, there is not much headway made in that for the disinvestment of the smaller units. It is more or less at status quo what it was, say a year back. And basically, what is happening is that DIPAM is driving this particular disinvestment. So we are not much in the know of these things. That what they are finally going to do about it.
Okay. And a very small point, sir. Yes, ma'am. I have got sufficient time. Thank you.
Thank you. The next question is from the line of Naresh Majumdar from B&K Securities. Please go ahead.
Yeah, good afternoon, sir. The name is Rajesh Majumdar. Good afternoon, and congratulations on a good set of numbers. Sir, I have one question on the wage bill. So we've been seeing a lot of wage settlements and payouts this year. And we've also seen a reduction in the number of employees as on 31st March 22. So what should we take as the wage bill going forward now that all the arrears, etc., have been paid? Or what should be the steady kind of wage bill now going forward?
It should more or less stagnate at this level, or maybe a bit less. Because what is happening is that this particular year, we have taken some major hits because of the actuarial valuations of our leave encashment and gratuity, which will not be a similar impact in the coming years. Plus, with the reduction in manpower, which is expected around 3,500 odd, so the reduction of 5% over the year surely will help in reducing our bill. So overall, we feel that with the normal increments in there and this reduction in retirement and this we will not require this provision for actual valuation of leave and all. So I think it should more or less be in this lines or maybe slightly less.
No, sir, the total for the year is 12,800 crores, and that's a sharp jump. So on a steady state basis, I mean, in the earlier calls, we have guided at 11,500 crores. Is that a correct figure to take for a steady state kind of wage bill?
See, what has happened is there are two major impacts. One is what I was telling you about this actuarial valuation, which has impacted us by around about 700 to 800 crores. And in addition to this, as compared to the previous year, there has been an additional impact of around about 300 to 400 crores approximately. That is for the PRP payment for the employees.
Right.
So these two factors have basically added up to that additional amount what we have.
Okay, so is that correct? 11,500 crores, is it a good figure to take, steady state?
Means in the coming year? You can say
Coming year, that's it.
maybe you should keep it at around about 12. 12 should be the comfortable figure for.
Okay, thank you.
Thank you. The next question is from the line of Aditya Warekar from Axis Securities. Please go ahead.
Thank you. So thanks for the opportunity. So in FY22, our saleable steel production stood 15% higher at 16.9 million tons. So how do you see the production profile going forward in FY23? And do we see any reduction in semis as a proportion of total production going forward? If you can throw some color on that.
Yeah, see, basically it's always an endeavor to reduce our semis. Okay. So first we take care. So what has happened is now most of our plants are stabilizing. Like we have the medium structural mill at Durgapur and the USM, Universal Structural Mill at ISCO. So they have now stabilized. So they will take more of the volumes of semis for their own consumption, and whatever is available, we will be probably taking it to the market. But we are very optimistic that this year it will be lower than what it was in the previous year, in 21-22.
Okay.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang. Please go ahead. Mr. Manish, please go ahead with your question. Your line is unmuted. Mr. Manish, may we request yourself, if muted from your handset, please unmute you. As there is no response, we'll move to the next question, which is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, can you quantify the average flats and long prices for the quarter that you usually give? And secondly, sir, how should one read into the trend line on flats and longs into this quarter, specifically after this export duty? Sir, even if you don't quantify it, it's perfectly fine. Just wanted to have a sense on the trend line, given flats account for a bulk of exports out of the country. So should one assume that the impact over here will be far more as compared to longs, or are there any other industry variables that one needs take into account to understand this, sir? Thank you.
There is still a substantial difference between the prices of flats and longs. In our case, of course, the longs have a component of semis also in that, which is also which is also impacting the NSR of the long. We can say that there is a difference around about 8 to 9,000 rupees between the two figures. And second question.
All right. So my question was, currently if HR coil prices are at say around 72,000 rupees, the export pricing, what we understand, it would be around say 61,000 rupees. So there is a huge gap of 60,000 and 72,000. So how should one understand after this export duty, where is it that this can actually end up? Would it be at a midpoint? How should one understand the scenario, sir?
Hi, Mr. Ritesh, this is Amit. See, the question is quite relevant. Of course, the export duty is definitely, like we said earlier, also is going to impact the prices and demand as well, maybe. But see, overall, it would be difficult to say anything right now, how and where the prices would move, how much quantity would get diverted into the home sales market from the exports, what kind of qualities would shift into the country. So that would be difficult to say. Of course, what happens is the prices, whatever impact would be there, would be in line with the market, and we'll have to move in line with those. What we also understand from our competitors, like say JSW and GSPL, Tata Steel and all, they were into exporting this HR coil quite a bit. So they will definitely have a direct negative impact, but how much of the demand impact or the price impact overall would be there would be difficult to quantify right now.
Sure, sir. That's fine.
Additionally, we would also be looking at the prices of imported coking coal to correct somewhere, because that is also not sustainable at the current levels. So hopefully we would be able to make margins given if those prices do correct themselves.
Sure, sir. And sir, a related question, sir, how should one understand the iron ore pricing locally, given there are steep export duties even on pallets over here? So are we looking at a significant surplus locally, and hence it can pull down prices? How should one understand this?
We expect the iron ore prices also to soften because of the export duties. There will be a softening of the prices, which will in fact help us to some extent, because the softening of the prices will be affected in the IBM rate, and our royalties are basically paid on the IBM rate. So we will stand to benefit from that.
Sure, sir. This is quite helpful, sir. I'll join back with you. Thank you so much.
Thank you. The next question is from the line of Mohit Bansali from Bonanza Portfolio Limited. Please go ahead.
Yeah, hi sir, and congratulations for the good set of numbers. Question regarding your Bhilai steel plant. You were earlier mentioning that you are going to start the head hardened rail production. So have you started that, and what will be the order book this year?
We have started on trial basis, but about the quantities to be supplied, we have to be still very, we have to see into it, because once you produce the head hardened, there's an impact on the normal rail production. So we are still trying it on trial basis. We had some trials in the month of April, but I'm not too sure that how much we'll be able to produce during this year. So railways are insisting for quite a large quantity, but it depends upon how much we are able to do it.
Sir, you are facing some problem regarding production. I just want to understand, because from quite long time you are trying to produce this head hardened rail.
Yeah, actually it takes some time, because it's a new item, and it takes some time to stabilize. So it is taking some time. We have our foreign experts also who are also on this thing. So it will take some time to stabilize.
Okay. And second question, sir, since you mentioned that you are facing this coking coal pricing problem shooting up like anything, what are your plans for your in-house production? Like you have Tasra coal block, you have ICVL coal block, and second you are sourcing from BCCL. Please go ahead, sir.
Actually, we have planned from our internal, from Indian sources, we have planned around about 2.5 million tons of coking coal, and this thing includes Tasra as well as BCCL and our other mines out here. But yes, and we are also following up with our ICVL mines at Mozambique, and we expect a slightly higher quantity in the coming year from there also. So overall, we have planned that the imported coal component, which will also include this Venga mine, will be around about 86%. 86% in the coming year, as compared to around about 87.5 to 88% in this year, in 21-22.
Okay. And sir, this rail order, it's been increased this year, or it's on the similar line last year?
They always want,
because it is very significant part of your the sales. Just want to ask that thing also.
They always want rails from us. They want more. Actually, in various forums, they are projecting more than 1.5 million tons also. But yeah, let us see what best we can supply, because we are very much keen in supplying as much quantity as possible to the rail.
Okay. And sir, regarding your deleveraging plan for the future, as you have already reduced your loan to 13,500 crore, any quantify, you can quantify any figure?
Really, it depends entirely on the market scenario, the coal prices and the steel prices. So it's very difficult to give any projections for the time being now.
But you plan to make it zero as soon as possible, because last con call you were saying that in next 2 quarters of this financial year you will try to make it zero.
Sure, but that was the scenario when coal was very low and the NSR was also very good. But now with the coal prices going up substantially, there are some pressures.
Okay, last question, sir. What is your inventory level as on 31st March 2022? What is your inventory level?
Just one second. 6 lakh tons, no? I think it's around 6 lakh tons. It's around 6 lakh tons.
Okay, thank you, sir. Thank you, sir.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Good afternoon, sir. Thank you for this opportunity. I wanted to understand more about basically the Bhilai and Durgapur problems, where the segment results have sort of dropped over the last 2 quarters. What are the specific problems that we are facing at Bhilai and Durgapur plant, and when do you expect them to resolve?
See, basically what happens in case of, you can say Bhilai is more or less 50% a long product plant, and Durgapur is completely a long product plant. The long products, the NSR were lower, as I had explained earlier, as compared to the NSR for the flat product. So this has impacted the profitability of Durgapur. And secondly, there is one more issue that the railways we have requested the railways to give us the pricing for 2021. 21-22 we have not yet. So once the pricing of the rails come, the revised pricing of the rails come, we expect that the benefit of that we'll get it in the subsequent period. We expect a substantial increase in the rail prices in 2021 and 21-22, which are still at which we are considered at the levels of 19-20.
Right, sir. And in terms of the Rourkela and Bokaro, both plants have sort of shown particular improvement in Q4. Rourkela profit increased from 637 to 1800 crore, and Bokaro profit increased from 986 to 1432 crore. So what are the key changes that has happened during this quarter which supported this better performance?
Actually, the NSR in the fourth quarter for the flat products was again better than the third quarter, firstly, and secondly, they would have done better volumes also. That is another factor which has helped.
Right,
Sorry
sir.
to interrupt you, Mr. Mehta. May I request you to please rejoin the queue? We have participants waiting for the turn.
Sure, ma'am. Can I just go for one last question?
I would request you, sir, if you can rejoin the queue. We have.
Sure.
Thank you so much. Participants are requested to please limit their questions to 2 per participant. The next question is from the line of Rakesh Dubey from Dow Jones Capital Company. Please go ahead.
Good afternoon, sir. Thanks for encouraging.
Mr. Dubey, we cannot hear you clearly, sir. Your voice is sounding muffled.
Okay. Actually, I just wanted to congratulate the management for coming up with this financial results in fourth quarter as well as
We cannot hear you, Mr.
The voice
Dubey.
is not clear.
I would
So
request
let me
you to
give
please
it.
check.
Right. Am I audible now, sir?
Oh, yeah. Now, yeah.
Yeah. See, actually, I just wanted to congratulate you for coming out with good financial results in fourth quarter as well as in previous financial year. And as you have mentioned that coking coal was a major factor which might have impacted your profitability to a certain extent in the quarter as well as in the financial year. So coming from that level, we have been hearing that, offers for Russian coking coal are likely to come at substantially discounted prices. So what would be your strategy? Would you be planning to increase Russian intake in coming days? And if yes, what would be the payment mechanism like? Because that is the main constraint at this point in time. This is my question.
Actually, we normally have long-term agreements with our coal suppliers. Okay, but with Russian coal suppliers, we do not have any such long-term agreement. However, we are trying to get some consignments on trial basis from them. Once those trial consignments are found to be in order, then we will try to take more coal from the Russian suppliers. So this will surely.
And by when this is likely to happen, sir?
Actually, we are trying to get it now only, but the only problem is there are some payment issues with them, and there are some issues relating to insurance of the vessels and even you can say some other issues which are there linked with that. So we are trying to resolve those issues. The moment these issues are resolved, we will surely try to start taking from Russia.
Thank you very much. And my second question is related to the indication which has been given by RBI governor that interest rates are likely to firm up further to tame inflation. So what impact this will have on sales overall financials?
Actually, of course, if the interest rates are expected to firm up, it will surely have an impact on the entire industry and actually on the entire economy, you can say. So sale will be impacted by that also. But there is just one thing that we are getting our borrowings, whatever are there, they are at very competitive rates. And bankers are willing to give it at their, you can say, the lowest rates also to us. So, of course, whatever the difference is there, we will also be bearing the impact of that. But I don't think it will have much of an impact with the borrowings coming down to the levels of 13,400 odd. So I don't think it will have a major impact on us.
Okay, sir. Thank you. This is all I had to ask you. Thank you.
Thank you. The next question is from the line of Prashant Kumar from Dolat Capital. Please go ahead.
Sir, good afternoon, sir, and thanks for the opportunity. Sir, we seeing that the capex for this year planned is 8,000 crores. Do you intend to incur this capex irrespective of whether cash flow supporting or only if the free cash flow supports you will do this level of capex?
Of course, to some extent, the cash flow will have to support it. But then, what happens basically in all these plans? Some are committed already, so that will have to continue on.
Okay, sir. Understood. And the next question, sir. Sir, today if we see our EV enterprise value is lower than the pandemic close, that is the flash crash that we had in March 2020. And in such a scenario, although the external environment is quite challenging, high coking coal prices, international markets being very tough to crack into, and things like that. In this type of a situation, government has imposed these duties. Sir, did you by when do you expect to go into, if at all, some sort of a cash loss situation, and would you sound the government that this is a situation? The situation out there is not easy. Sir, exporting steel itself is an achievement, no, sir. 18 million ton if India is doing that, that in itself is an achievement. So patting the bag with they are doing this kind of duties, etc. So today, barring industries where there is labor arbitrage, being able to establish ourselves as a country in the international market at a global scale, competing with the best of the world, and actually being able to sell volume, that itself is an achievement. No? So why are we not getting credit for that?
See, to answer your question, this is basically something beyond our control. It's a government decision, and whatever they decide, there are factors. They don't necessarily look at only steel industry. Keeping in mind the entire economy, they have to take the decisions. Of course, steel industry, given whatever the impact they would be facing or are facing, we would definitely be talking to the government on that. If it starts to hurt the margins and all, there would be maybe representations from the steel industry also. As of now, we are not planning anything on that. We'll have to wait and watch how the impacts turn out, because it is so likely that if it can also give us a benefit in the sense that if steel prices come down, it can on the other side also help us in getting a higher demand from the consumers of steel. So if that happens, maybe it can turn out to be a silver lining in that cloud for us. We'll have to wait and watch. And as far as government decisions are concerned, we are going to be with them for the time being. We'll take whatever call is to be taken in future, keeping in view the entire economy and the industry as such.
Okay, sir. Thanks and all the best, sir.
Thank you.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. My first question is on working capital. If you see last 2 years, we've reduced debt by 37,000 crores, but 20,000 of that has just been contributed by working capital, almost 10,000 in each of the last 2 years. And if you look at our receivables, debtors, inventory, they've all gone favorable to a very unprecedented low level. So just want to understand, these low levels of working capital, how is it sustainable? And how do you see this working capital movement in FY23?
Actually, what has happened is these debtors, which were substantially high in the earlier years, we had a special drive and we took up with the railways. The main debtors were railways in this. Out of the 8,000 odd crores which was there in the earlier year, almost 4,000 to 5,000 was from the debtors, from the railways. So this, we had taken it up with the railways and we were quite successful in liquidating most of them. There were some invoices which were, 2 to 3 years ago, which they were not clearing. So we had a special drive with them and we could clear it. So that has basically helped us in reducing the debtors. If you see basically the other debtors which are there, we have got PSU debtors, which always hovers in the range of, sub 1,000 rupees, 1,000 crores, say 800, 700. So it's in the range of that only, around 600 crores. And the other debtors also, that is normally in the range of around 3,000 odd crores. So it is at the same level. It's basically the railway debtors, which were which are very high, which we have brought it down to around 1,100 crores in the current financial year. But yes, it is a thing that maybe the debtors will go up. The impact is the basic reason for debtors going up is also it depends on the price of the material which we are selling, and so that also has an impact on the debtors. If the price is high, so the debtors also tend to increase.
Okay. So any further benefit are we expecting in FY23?
No, I don't think this is actually absolutely rock bottom, I think. I don't think we'll be able to, because again, railways, it depends on the budgets, whatever they get. So last year they were quite liberal in releasing all their budgets to us, but we do not know what is going to be the impact in this year.
And sir, what about the liabilities? Even the payables, etc., have gone up substantially. These levels have never been seen before. So if you can just explain on that front as well.
Yeah, it is basically what is happening is that we have got arrangements with our coal suppliers. So basically what happens is that since the coal price has gone up, So it has had a subsequent impact on these payables because we have got credit lines with them of you can say 2 to 3 months. So we take advantage of that. And since the prices have nearly, you can say, traveled from what levels it was in, say, March 21, so this has also had an impact on the payables position also.
Okay, so since creditors increasing from 7,000 to 17,000, so once the coal situation normalizes, this benefit which is sitting in working capital is also should reverse, right?
Yeah, it will move, right.
Okay, understood. So second question is on the coking coal front. I mean, what sort of inventory levels do we have? And you said a 10-15% increase in 1Q. So what is the dollar per ton cost are we factoring in that estimate?
Come again?
So one is in terms of inventory days, what sort of coking coal inventory do we have?
Inventory days, we normally have 35 days of inventory with us. That is being at the ports as well as at our steel plants.
Okay. So, and when you said a 10-15% increase in coking coal cost in 1Q in the coming quarter, what is the dollar per ton cost have we calculated?
It should be in the range of around about $450 or maybe, because see what is happening is it depends entirely on the blend, what is being consumed. So if there is higher level of PCI, so the rate of PCI is lower, so we stand to get an advantage. So is for the soft coal. So now our emphasis is mainly on higher quantity of PCI and higher uses of soft coal. So hard coal is one of the most expensive. So we are trying to restrict it to the optimum level so that the overall cost of coal comes down. Even we are planning to have more of indigenous coal in future. So the overall cost of coal should come down to some extent, but it will be high. It will be at least 15% high.
Okay, and what would be the spot rate?
May I request you to please rejoin the queue?
This is a follow-up. Yeah, this is a follow-up. Just 1 second. Just want to understand, sir, on the coking coal front, I mean, what is the spot rate versus what we will average out in terms of cost in 1Q? So just want to get some directional sense as to in 2Q, what sort of inflation one can expect if coking coal prices stay flat from here on?
See, basically, we are also guided by the spot rate. We take the average for the month for the Argus and Platts indices, and based on that, whatever we have got some long-term agreements, as I've explained earlier, with our suppliers. So we get a discount on that. So we avail that particular discount and we arrive at the price for a particular month. But then what happens is that is at the load port, whatever the rate is there, that is there. Till it comes and gets consumed, it takes normally 1.5 to 2 months. So that arbitrage is there. Means whatever we are going to get today, it may not affect, say, the month of June. It will probably affect the month of July or maybe even August.
So, sir, is the understanding correct that if there is no change in coking coal prices in the market in the next few months, your second quarter coking coal cost will further increase from first quarter as well?
Yeah, we should keep our fingers crossed.
Okay, all right. Thank you and all the best, sir.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, sir. So I have a question on our capacity. So now, when will we start actually realize this 20.2 million tons of saleable steel capacity? Because now all units have stabilized. I guess Bhilai, there was some issues with the finishing facilities. So when can we expect, utilization of close to 90% over at all the plants?
Actually, we were having some issues about stabilization of our facilities, due to which we were not able to, reach our capacities. But 22-23, we expect that we will surely be doing well as compared to even 21-22. So we expect that we will be very near to our capacities in this 22-23.
Yes, sir. So you think that the Indian market can absorb this incremental volumes now, especially with the export duties coming in, or do you think there'll be some sort of production cuts that can happen across the industry?
See, it's too early in the year to talk about it. See, what happens is like we did not expect a COVID year and suddenly things turning around last year. So it's too preliminary to talk about this, and maybe whatever policies the government has introduced now, whether they will last for the entire year or they may come out with some stops for us, we really do not know. So it's really a preliminary thing, so we cannot just think whether. But yes, our intent is to produce and sell the most.
Sure, sir. Just lastly, so what was our export proportion in FY22?
Around 8%. Quantity. Just one second. Around 8.6%.
Okay, sir. Yeah, thank you.
Thank you. The next question is from the line of Falguni Datta from Jete Securities. Please go ahead.
Yeah, good afternoon, sir. So I have two questions. What is our coke rate?
Coke rate for the current financial year is 445.
445. Okay, and sir, what was our average realization? Average steel realization for Q4?
Around, just one thing, around 60,000.
Sorry, sir?
Sorry to interrupt, Falguni, but there is a lot of disturbance which is coming from you.
Yeah. So what was the average realization for Q4? I just missed that number.
60,000.
60,000. And sir, if you could just give me the flat realization separately for Q4.
It was around between 64 to 65,000.
And sir, lastly, what would be the current flat realization currently?
We really do not know. In April, it had improved to some extent, but
no, like if we just say as date, like we know that it's not possible to in this volatility judge anything, but as on date.
Again, I had explained it earlier that it is the average rate or whatever rate we arrive at. It is basically the earlier contracts as well as whatever we have entered in this month, plus what we planned, plus with the projects we have got around. So the projects rates are something different. So
okay.
It's preliminary to tell you the figure for me.
Okay, that's all. No problem, sir. Thank you, sir.
Thank you. The next question is from the line of Sagar Gandhi from Future Generali India Life Insurance. Please go ahead.
Yeah, sir, my question is on dividends. So, sir, is my understanding correct? This year we have paid 30% of profit after tax. So next year, as we cannot predict our PAT, is it fair to assume that of the 54,000 crores net worth, 5% is what we will have to pay, the number which will be close to 2,600 crores in absolute terms?
Yeah. That see, what is happening is that we will decide that basically based on our profitability and our capability to pay out also. Because it depends on the cash flow also. Then if if we are finding some difficulties since we are having substantial investments in capex and all, so we will have to take up with the government at that point of time.
But sir, in case you choose to do 8,000 crore capex as you guided, then can you convince the government, or is it a negotiable item? Because in my understanding, whichever is higher, 90% of PAT or 5% of net worth, if you are a profitable enterprise, then that is what you will have to pay.
Yeah, but then in previous years also, this guideline was there, but we have somehow got our exemptions from the government.
Okay. Yeah. And sir, second thing is because we've made solid OCFs over the last 2 years, and debt is also at very reasonable levels. Even assuming that debt levels will go up from here, is there a scope that company will consider a buyback? I mean, is it something on your agenda?
We are not. We don't plan to have any buyback in the near future.
Okay, thank you, sir. That is it from my side.
Thank you. The next question is from the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Yes, sir. One question on the part of coking coal. So it seems very unlikely that your cost can hardly go up 15%. Even if we take, like say, whatever lag which we want to take on the spot prices or the benchmark prices. So it should not be lesser than like the 25 or 25-30%. So and when we say that we consume PCI, but even today PCI is at the lowest ever discount to the prime coking coal. So it's really difficult to understand your guidance on hardly around 12 to 15% increase in coking coal cost when our inventory is hardly at around 35 days.
Basically what is happening is that we expect to improve our blends to some extent, and then higher level of usage of pellets, which have already started. So this will bring down the coke rate also to some extent. Like whatever we have planned at nearly a reduction of around 5% in the coke rate for the in this current financial year. So we surely expect that all these cost control and cost cutting measures will surely help us in bringing down to some extent the impact of the coking coal cost.
It's not about like say adjusted for input output mix. It's just purely on the coking coal cost. So coking coal cost price has nothing to do what your consumption levels are.
Consumption cost. No, we are talking about the consumption cost.
So like say usually we used to give the precise number for the coking coal cost, and this time around surprisingly you are giving the ranges. But sir, how much was the cost in or consumption cost in the previous quarter, and what has been the consumption cost in like say April?
You want the consumption cost of fourth quarter?
Coking coal.
Okay, we'll just send it. We'll send it to you offline. We'll send it to you.
Yeah. And secondly, on the capex side, sir, we have roughly around 3,500 crore capex in last year, and this time, like say, we are guiding 8,000 crore capex. So what incremental capex we are going to take, because we have not ordered any single machine in the last 1 to 1.5 years, because we were focused on commissioning those assets which have been commissioning for years and ages. So what all new capex or new ordering we have done in last 6 months?
We have actually had lot of automations in Bokaro, and we have also gone for our stamp charging batteries, which will also, we have also got clearances for our stamp charging batteries, which are very capital intensive. And moreover, there will be some other, the major other expenditures are in the small schemes which the plants will be taking up. So you can say each plant will be taking up around about 300 to 400 crore worth of schemes at the local level, which are known as AMR schemes, which will be taken up. So we feel that I'm not too sure that how we are going to achieve it, but then yes, our targets for the year are 8,000 crores, and some major schemes are in the pipeline for which the major expenditures will also take place.
Okay. It would be appreciated, sir, if you can give at least some breakup, like where we are going to spend, because in the earlier presentations you used to give like say how much would be on the process management and all those things.
We'll send it to you offline.
Thank you, sir. Thanks a lot.
Thank you.
Please let this be the last question. We'll take the rest of the queries then offline.
Sure, sir. I would like to hand over the conference to Mr. Vishal Chandak for closing comments.
Yeah, thank you everyone for participating in today's call. I can see a huge amount of queue on the question answers still there, but unfortunately, due to paucity of time, the management has to leave. I would like to thank Mr. Tulsiani for the time and his team as well. So, Mr. Tulsiani, handing over to you for the closing comments, please.
Thank you, Vishal. That this year is a real challenge for us. Last year was really a dream year for, I think, the entire steel industry. And we just hope for reduction in the prices of coal and other inputs, which will help us in reducing the rising cost of production. And going forward, our focus will be on increasing volumes, improving the product mix, and improving operational efficiencies for controlling costs. And hopefully, we are able to deliver sustainable results in the coming quarters also. Thank you.
Thank you.
Thank you. On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.